Don't spend a single hour on Apple stock before you watch this. I'm going to put it through the PULSE framework, which stands for economic profits, underlying free cash flow, leverage, smooth free cash flow yield, and EV cap rate. You can find more on the framework in the description. With that, let's go. I'm going to launch Excel here, and I'm going to type in the ticker. You can see the template is not populated right now. I'm going to type in the ticker right here, and hopefully the data will come up in just a second or two. Here we go. So let's start with the P, which is economic profits here in the upper left corner. And this looks excellent. They're positive, they're rising. You couldn't ask for a better chart there. Next, the U, which is the underlying free cash flow in the upper right corner. Again, great chart. You have positive free cash flow, which, always a good start. They're rising, which is good. And you have the free cash flow conversion to net income close to 100%. So excellent result as well. Next, let's go to L, or leverage. Here, leverage is defined as net debt to EBITDA is very low, close to zero actually. So again, very safe balance sheet. We don't need to spend too much time on that. And then let's go to the last two metrics, which the first of which is the smooth free cash flow yield, the S in the PULSE framework. And that one is not as great. 3.5% is a fairly low free cash flow yield. And again, this is 7-year average pooled to a forward 12-month equivalent. So 3.5, that's not great. That's a pretty low free cash flow yield, and low free cash flow yield means that the stock is embedding high expectations. Doesn't mean those will not be met or will be. It's just that's what the stock price is implying. The expectations are fairly above average for future growth. If we go to the last metric, the E, the EV cap rate, which unlike the smooth free cash flow yield uses enterprise value and also uses last 12-month data, the 3.1% EV cap rate, that's pretty low as well. So if I were to summarize the PULSE framework for Apple, you have excellent economic profits, excellent underlying free cash flow, very safe and low leverage, which is great, but the valuation is not attractive. At least it's not particularly interesting to me at a 3% free cash flow yield and EV cap rate. To me, that puts Apple in that second category, which is interesting company, but would be a more interesting stock to research at a lower price. And that's where it stands for me. Doesn't mean that it's not a good stock. That just means that it's not a top priority for research if I were looking at this screen right now. If you want to grab the template I'm using for the PULSE framework, link is in the description. And if you want me to put any specific company through this PULSE framework in one of the videos, just leave a comment with a ticker and I'll add it to the pipeline. See you guys in the next one.